Hello and welcome. Wanted to do a brief video to provide a bit of a summary, a bit of a recap for the first quarter of 2024. 3-month period that was quite strong from an investment standpoint. And in this video, we're going to get into a couple of the reasons why the first quarter was strong and a couple of things to look for as we move forward toward the rest of the year. So the first thing to keep in mind from this quarter is interest rates and inflation. So inflation continued to decline, but it's sitting around the 3% mark in both Canada and the US. And it's been sort of sticky in this level. It's remained stubbornly above the 2% target of central banks. So the Bank of Canada and the US Federal Reserve have this 2% target, and although inflation's come down, hasn't come down to that level yet. And so interest rates have remained steady. There was some talk coming into the year that interest rates might start to decrease. Central banks might start to cut interest rates in the spring. And it seems like now that's probably not the case because inflation's remained sticky and the economy has remained a little bit stronger than we might have expected. So now it seems like if interest rates are going to start to come down, that's probably going to happen in the summer or perhaps even into the fall months. One other thing I wanted to mention briefly about inflation. In the financial world and financial markets, we sort of look at inflation. It's a month over month data series. It gets annualized, and so, but in the real world, inflation's felt a lot differently. So when we talk about inflation's fallen to 3%, that doesn't mean prices are coming down. It just means that the rate at which prices are going up has slowed. And so in the real world, prices since the start of COVID about 4 years ago, prices on average are up around 20%. And certain things like food are up more than 20%. And so by a lot of measures, the economy is doing all right. Unemployment is low. Economic growth is doing fairly well, especially in the US. But it's understandable why so many people are upset with the economy. Because when you go to the grocery store, which pretty much everyone does at least once a week, and you see what you're paying, which in a lot of cases is more than 20% higher than what you were paying before COVID, people get upset. And so that's an important thing to keep in mind about inflation, sort of different what Wall Street and what what we look at for inflation relative to what most consumers actually feel when they're at the store and seeing consistently much higher prices than they remember a few years ago. So that's just another piece I wanted to point out as we talk about inflation and interest rates. Now, looking at stock markets around the world. So starting off in the US. The US economy has remained strong. The US stock market, whether you look at the S&P 500 index or the Dow Jones index or even the NASDAQ, the technology heavy index, they've all reached record highs so far this year. And this was caused in part by better than expected corporate profits and also continued excitement about artificial intelligence. One example of the power that AI has had leading the market is NVIDIA. And NVIDIA is the leading producer of semiconductors, these high-end GPUs and chips that's powering a lot of the AI spending and the AI development. So NVIDIA is now the third most valuable company in the world, behind only Microsoft and Apple. The share price is up approximately 80% so far this year, which is really incredible for a company of that size to have gained that much value. It's gained about close to $1 trillion in value. And some pundits have called that quick rise in share price leads some to say that it's a bit of a bubble, which might be to some extent true. But what's incredible is that the underlying fundamentals of the company are also doing incredibly well. So last year, the company grew its sales, they more than doubled And we're talking tens of billions of dollars here in sales. So it's a huge amount, and to more than double is really incredible. And the expectation this year is that sales will almost double again. So that's almost a 4 times increase in 2 years. And even this most recent quarter, expectations for NVIDIA were very high because of how well the stock's been doing. And they even managed to surpass those high expectations. So that's just an example of one very high profile, high growth company that's delivering, even surpassing the heightened expectations for it. Now, it's not just the US market that's doing well. Other countries around the world are also performing well. So the Japanese stock market, the Nikkei, recently reached an all-time high value. The German stock market hit an all-time high. There are a number of countries around Europe. Generally, in most countries in the world, stocks are doing well, stock prices are higher. Canada is no exception. Stock market did well, has done well in Canada here for a number of months. We're still not quite back to the peak value of the TSX composite index. That is from 2022, and we haven't got quite back there yet, but we're getting close. And so basically all around the world, stock markets have performed well through the first quarter of the year. So in terms of looking ahead, as I just talked about, the last 3 months, first quarter of the year has been quite strong in the US and around the rest of the world in terms of financial markets. In general, I mean, the last quarter of 2023 was also a positive one. So the last 6 months has been a very, very good period for stock market investors. And it's been such a good period that we wouldn't be surprised to see, in the short term at least, a bit of a pause or a bit of a pullback. It's kind of like after you've had a holiday meal, maybe a big Thanksgiving meal, you need time for the food to digest. You need to take a bit of a breather. And sometimes that's healthy for the markets. And after the last 6 months we've seen, especially in the US market, that would be very healthy and very reasonable to see a bit of a pause or a bit of a pullback. But in general, we continue to have a positive outlook for the months ahead. And one reason for this is something that's not maybe overly intuitive. You might think that after the market hits a new all-time high, that's a reason to be automatically cautious, or what goes up must come down, that type of thinking, which is reasonable. But when you go back and look at the data, that's actually not what plays out. So after you've had, this is in the US specifically, period where the market surpasses a prior peak. So this happened in January, where the market reached a new all-time high. And you look out over the next 12 months, and you look at what the market has historically done, that average return over the next 12 months is actually better than the average return of the US stock market overall. So on average, the US market actually performs better after surpassing a prior peak, which is not intuitive, but that is what the evidence indicates. So just an interesting way of thinking about things, that strength in the stock market typically leads to more strength ahead. I hope you enjoyed this video, a little review of the first quarter of 2024. As always, if you have any questions, concerns, or comments, I'd love to hear from you. Please reach out. Thanks very much for watching, and take care.